And if you were, just a regular thinking person, you could have thought, well, gee, that Apple company sounds kind of interesting. But the next step is, how do I trade it? And with that, you need a process. And that's really basically what the book covers, is the process using a very simple compass, which I call phases.
Welcome to the My Future Business Show, where we get you in front of your best audience and keep you there. Not only are we interviewing the biggest names in business to help you become even more successful, we're inviting you to book your spot on the show to help you grow your business. So at the end of the call, make sure you fill in the interview application form at myfuturebusiness.com/interviews. Hi and welcome back to the My Future Business Show. My name is Rick Nuske. I'm the host of this wonderful experience, and on that, I just have to say thank you so very much for everybody who's given me some feedback. It's been absolutely wonderful and it validates the show. It's making a difference to people who are tuning in, so thank you so very much for that. Now on today's call, I'm with Michele Schneider. How are you, Michele?
I'm very well. Thank you, Rick. How are you?
I'm very well. Like I said, I've got 2 feet and a heartbeat. Can't complain. Now, Michele, your book that's just come out, Plant Your Money Tree, A Guide to Growing Your Wealth, is fantastic. It's gaining some amazing reviews. But before we deep dive into this book, I would love to share with the My Future Business audience a little bit about yourself, especially when you're not working. Could you share a little bit about yourself for the My Future Business audience?
Well, I live in Santa Fe, New Mexico. Are you familiar with it at all, Rick?
I am now.
It's absolutely, I think, one of the most beautiful places to live in the United States. It's in the Southwest, but it's high desert, so you don't get the heat waves that you get, say, in Arizona,
Yes.
because we're 7,000 feet above sea level, which means that we have wonderfully warm days in the summer and cool nights, no air conditioning.
Oh.
And we're surrounded by mountains, so there's a tremendous opportunity to ski in the winter because we do get snow at the high altitude, and hike in the summer. So if you're an outdoorsy person, it's just beautiful. Plus, little trivia, it is the second oldest city in the United States.
Well, there you go.
Yeah, so steeped in history, Native American culture is huge here because this was the hub of where Native Americans lived for a long, long time in peace until we know that history changed.
Of course. Now, one thing leads to another in our life's journey. What led you to that decision to move there?
Well, I grew up in New York and worked in New York my whole life, and it was just my husband and I both worked in the World Trade Center, and after 9/11, we kind of thought, we never really lived more than about, I don't know, a half an hour from where we were both born. Maybe there's other place we can go now and check it out. And it was really a matter of circumstance that my husband met some people in Dallas who lived in southern Colorado. We said we would come visit. They said, let's meet in Santa Fe. And it was that one night that we were here that it just kind of like struck that this was the place.
Yeah, and that realization, I'm home almost.
Exactly, which is exactly how I got started in trading, by the way, which I can tell you that story if you wish.
Absolutely. But first, could we just touch on a little bit? I've never actually spoken with somebody who's actually worked in the World Trade Center. Could you tell us a little bit about what that was like?
Well, I worked on the commodities exchange, so I was in 4 World Trade Center and was on the 7th floor. But for a while, I was working for a trading firm on the 108th floor. And I would look out the window and I would say, in these foggy days where you could see nothing, what would prevent a plane from flying into the towers?
Get out. You didn't.
I would. And so I actually was so terrified by that notion and the elevators, which kind of freaked me out, that I went back down to the floor. I did not want to work upstairs anymore. So in 4 World Trade Center, was this humongous space where there were all the commodities we're trading, all the New York commodities we're trading. So you had metals, you had cotton, orange juice, sugar, coffee, cocoa, the financials. It was 3,000 or so people running around every day. What looked like pandemonium to the casual observer actually had some order to it.
It did have some order. Now, that's one of the wonderful things about trading and things like that. Now, I'd love to wind back a little bit to that genesis of your involvement with the trading field. Could you share a little bit about that with us?
Well, I grew up in Queens, New York, and my father was a postal worker, and so we had a very modest economic background, and we never sat around the coffee table in the evening talking about our portfolios, that's for sure. And so what they did tell me was, because I was a very good student in school, that I should become a teacher. And from their experience, that was the goal for a woman at that time.
Hmm.
And so I did. I actually became a special education teacher, and I loved doing that, but I had no money. I was broke. So it turns out that I moved into Manhattan, and there was a woman that lived in my building who knocked on my door one day to borrow some sugar, or proverbially sugar.
We'll go with sugar.
Yeah, we'll go with sugar. Exactly. And anyway, it turned out she worked for Merrill Lynch on the floor, and she kind of felt sorry for me because she could see that I was sort of struggling financially. She asked me if I wanted to come down and see where she worked. And kind of like what I just mentioned to you about Santa Fe, I went down to the floor and my eyeballs popped out of my head. I was, very young and single. And even though the men, which of course it was dominated by men, wasn't the only factor, it was certainly a factor. But I also found it to be so interesting just how people were moving about and making these decisions on the fly. And I was looking for a better way to make money, number one, and number two is I'm kind of ADD, so all that activity appealed to me, and three is that I thought, wow, I've been so isolated in my life. I'd always been in school, either as a student or a teacher. This would really introduce me to the real world.
Yeah, wow. Thank you so much for sharing that. That's amazing. Now, I wonder, I'm just picturing you that first day on the floor. How was that for you? I'd love to hear about that experience.
Well, it was very interesting. First of all, to get to the floor, it wasn't the impetus wasn't that I was a woman, which
Hmm.
people would believe would have been the case since there were very, very few women down there. It was more that I was a teacher and I got hit with that adage of those who can't teach. But this guy hired me to be the coffee, sugar, cocoa analyst for Conti Commodities, which was the futures division of Continental Grain. And basically, it was baptism by fire. I went down there that first day and I was supposed to get on a squawk box to all of the brokers throughout the world and tell them what was going on in sugar. And I didn't know a thing, not a thing. And so I just started running around asking people, any kind face I saw, hey, can you tell me what's going on? I would take notes. I'd run to the box. I would say what was going on. Somebody would ask a question. I'd be like, I'll get right back to you. Run, get the answer, come running back. And, within 6 months, I got a membership, and it was really, I really took to it. So the first day was a lot of fun, very crazy. And I did get hit with a little bit of male chauvinism, but it was gentle.
Yes, thank you. Now, over time, that surely has changed that environment, and there'd be hopefully a lot more balance between male and female traders. What does it now look like in that space, in that regard?
Well, actually, the whole floor notion is extinct. It doesn't exist anymore. Open outcry trading, which is what it was, where you go in the pit and you bid and offer with hand signals and a loud voice,
Hmm.
which was never my forte, the loud voice part. That's done. So it's all electronic trading.
Ah, yes.
So yeah, so now on the floor, I spent 13 years there, and I have to say there were never more than just a handful of women the entire time. And I think it was a very physical situation. That's part of the reason. And I just don't think that women were really attracted to that type of business
Hmm.
because of the physicality of it.
Yeah,
I loved it, but on the Wall Street, on the stock exchange, there were a lot more women.
right.
Yeah,
So, go
go
ahead.
ahead.
No, sorry.
No, no, you go ahead. No,
No, look,
you.
because I'm very interested in understanding how we've transitioned away from the shouting on the floor environment to the digital environment now, and how that's changed your views and your approach to trading.
Well, there are certain things that being a floor trader, you never lose. The five senses that you actually employ on the floor, which included sometimes taste and smell. Those were sometimes not the most attractive senses to employ. But you never, when you watch the market electronically and you go back to the days, you can actually look at the ticks and hear the noise in your head and imagine the emotions of the people in the pit when things start to get bid up or when things start to sell off. That doesn't go away. So there's that. But, it's very different because I used to trade basically one future. So when I was trading sugar, I would trade sugar. When I went over to crude oil, I traded oil. I didn't necessarily run around the floor, but here you can trade anything and everything, thousands of instruments. So it requires a lot more focus off the floor than it did on the floor. You were sort of forced to focus there.
Yeah, did you? It seems to me that your experience on the floor physically has most definitely positioned you as a better trader in the digital space. Would that be fair?
I would think that would be totally fair, especially since we really understand that even though everybody watches news now, because it's coming at you so fast and so furiously through so many different channels, on the floor, there weren't headlines going by. You are a price watcher. And I think that knowing about price and seeing how prices move and following price put me at an advantage when I went, as we call, upstairs, because I could still tune out the noise, all the headlines that flash on Twitter, which I'm on all day long,
Hmm.
but I can put that aside and go back to just the pure price action. What is going on? Follow that.
Yeah. So, does this your approach negate the need for understanding the psychology of the markets and things like fear of missing out? How do you manage your mindset as you are in this space for those who are not done it before?
Well, first of all, there's actually two parts to that to
Hmm.
that answer. Number one is on the floor, there is definitely an emotional component. I mean, and you get to see it, you get to witness it firsthand. So here you have to sort of see it through the herd mentality of the ticks, of, the prices flashing by on the screen. That's number one. Number two is in terms of oh, I'm sorry, tell me what the second part of that,
No, no, no.
the
Just about the psychology and this idea of the fear of missing
fear of
out
missing out.
as a
That
trader.
also, well, that also existed on the floor, as did high frequency trading in essence, because you would see these large orders coming into the pit and then you'd see the brokers jumping ahead of them. That in essence became your high frequency trading. And then in terms of the fear of missing out, when pandemonium struck and people would be bidding up, you would see guys running into the pit from all over the place, jumping in to try to get an order off so that they wouldn't miss out. So nothing about trading really has changed as
Hmm.
far as the psychology of human beings. And I don't think the psychology of human beings will ever change. But the technique and the process that I've had to use, that has definitely changed.
Thank you so much for sharing these insights. They're very powerful, and everybody's on the call today. I hope you have a pen and paper and taking down some notes now. I know that you have been recognized as in the top 50 financial people to follow on Twitter. That doesn't happen by accident. This is obviously a very well thought out, tested and tried approach that you have. Now, for the lay people who are out there, what is this all about? And can we start back at the fundamentals of where they would actually start if they're interested in this field?
Well, that's a really good question, and I'll try to make it as brief as possible. I mean, for one, let's talk in my book. I wrote the book because I wanted to put something out there that was not condescending like personal finance books that just tell you that you should save your money and not spend, the extra $5 on a latte and live below your means,
Hmm.
come from a place of scarcity, or intimidating like the highly technical books that most people would never pick up, and even if they did, they couldn't follow it. I wanted to hit the sweet spot in the middle. So the book is a really good place to start because what it really discusses is a couple of things. Is we all have ideas, we all get ideas. They can be as simple as going to a store or buying a product or hearing something on the news and using what Peter Lynch called the consumer instinct to get that idea. So I cover that. But then what happens when you get an idea? And there are so many ways to get trading ideas. IBD puts out a list. You might follow a particular analyst. Or like I said, if you just want to try to generate the ideas yourself, a great example is going back to 2007 when iPhones first started appearing, and all of a sudden you realize that you could do a touch screen, which never existed before. The
Hmm.
head the headphones, which were black, were now white. That stood out. And if you were, just a regular thinking person, you could have thought, well, gee, that Apple company sounds kind of interesting. But the next step is, how do I trade it? And with that, you need a process. And that's really basically what the book covers, is the process using a very simple compass, which I call phases.
Right, and I can see that there are six of them. Now, you talked about 2007. Let's fast forward to 2008. And then I start thinking about the Warren Buffetts of the world, that when everybody's panicking and selling, you should be buying. What's your view in critical times like that throughout history, and what do you do yourself?
Well, there's a fine difference between being Warren Buffett, who has very deep pockets, who can
Hmm.
actually buy a falling knife, as they call it, and sit with a huge loss for a long time and wait it out.
Hmm.
Most people can't do that, and nor would I ever recommend that anybody does that. So when you get a situation like you had in 2008, where the market dropped 57% from its high,
Mm.
you didn't want to buy that 20% lower and then have to sit through another 37% downturn. People got wiped out. So wiped out that there was actually post-traumatic stress by a lot of financial planners for years, even when
Mm.
the market turned around in 2009.
Hmm.
And that's where the compass comes in. We all want to be Warren Buffett's to a degree, but this is a way to be able to time it in so that you're getting in at the bottom, but at an inflection point when things are starting to turn from a bearish move like we had in 2008 to what we call the recuperation phase. And you use that compass just like you would look at a compass with two needles, north and south, using two very simple moving averages. And I try to tell people, don't be intimidated by that, because we all learned how to look at a bar chart when we were in school.
Hmm.
And we can all look at two lines on that chart and determine, based on the parameters that I give, what that means, what the phase is, and whether or not you should be involved or not.
Yes, and I wonder about trading bias, because let's just say, for example, I love software, and I do. So I have a bias to trade in, say, AMD shares. Now,
Hmm.
I'm no more skilled than that. I know how to buy them. I know how to set up an account to trade, but then I'm the classic buy and hold type of investor. Um, what would you say to that type of, I guess, mentality towards the stock markets?
I am very against passive investing
Hmm.
for many reasons, because if you look at the history of the market, a lot of people who are trading now don't have the history that we have. I started in very long time ago. Let's put it that way. I was young, so I've gotten to see the market stagnate for 15 years, where it did absolutely nothing from 1968 to 1983. And then the dot-com bubble that we had, which also had a huge downturn. Then, of course, the 2008 downturn we've had. And even though we've had our downturns, 20% drops, and we've come back, what it's done is Wall Street sells that idea of buy and hold. Don't worry, things will always come back.
Hmm.
But that's not true. Look at Japan. Japan peaked 35 years ago. And here we are 35 years later, and it's still not even half of what it was at its peak. We
Yes.
say, oh, can that happen here in the United States? Absolutely, it can happen here, because we have a lot of things going on that are historical that have not been proven out. Like, for example, negative interest rates worldwide and heading sort of that direction in the United States, going to zero interest rates here potentially if we get any kind of major downturn or the tariffs don't work out or what have you.
Yes, and go ahead.
Well, I mean, there's a lot of geopolitical situations that are very different now that didn't exist before, not to mention the fact that we have that divide happening between the haves and the have-nots. at a, also historical record. We have debt at historical record.
Hmm.
So, these are scenarios that if things got ugly, they could stay ugly for a long time, a long time. So that's something to be concerned about. The central bank here in the United States is even talking about climate change as a devastation potentially to the market. So I'm not trying to scare you or anybody for that matter. I'm
Hmm.
just saying that when you have a system where you can see the phase change and you can make preparations, then certainly being attached to your position and watching it go down to the point where it potentially wipes you out is not smart.
No, definitely not. And you look at emerging markets. Another one that I was interested in was cobalt and lithium for
Hmm.
electric vehicle batteries. And I thought I was the smart guy, and I jumped right in. And then all of a sudden, the stocks, through one reason or another, went from my buy price of 80 cents per share down to 20 because there was some sort of issue on site, or so many variables to take into account here. And I think about those things. What's your view on watching things going on?
Well, you definitely have to have some level of slippage when you put on a position. The first thing you want to think about is how much am I willing to lose on this position? That is extremely important.
Hmm.
So before I even get into a trade, I say, where am I wrong? And then where I'm wrong based on how many shares am I willing to buy, based on, of course, how much you have equity wise in your portfolio. So just to use for an example, very conservative, which I am, which is why 40 years later I'm still in this game
Hmm.
and teaching it now, is if, let's say we have $100,000 in a portfolio. I believe that one should never risk more than 0.5% to 1% on any given position. So that means you're looking at anywhere between a $500 to $1,000 risk of your money on any given trade. So that's where you then plan. I'll get out here if I'm wrong, but you want to give it enough room so that just the normal gyrations that happen in a market don't blip you out. So that's the first thing. Plus, not only that, you are anticipating that if I'm wrong here, it's because I think I'm going to be right there. So the other side of that equation is you have to have some level of a target in your mind. So I'm looking at actually lit right now as we're talking, which is not the future.
Hmm.
It's actually the ETF, LIT, aptly named, of course. So right now, it's actually been trying to bottom after it had a big move up in 2017. It's come straight down since then. And it's a commodity, which we can talk about that later because commodities have been incredibly undervalued compared to equities, actually at like 100-year ratio lows. So that's got my interest very peaked here.
Hmm.
But if I were, let's say, going to buy lithium tomorrow,
Yep.
I would see in my compass that it's in a recuperation phase. So it's been bearish, it's trying to recover, and that if I was going to risk anything, it would be for it to actually fail from a recuperation back into a bearish. If it goes back into a bearish phase, I'm gone. On the flip side, if I'm going to risk, let's say, $1, if I can get $3, $3, I've now made 2 to 1, 3 to 1 of my money. I'll take a little bit off the table, and then I will raise my stop to no loss. So essentially what you're doing is you're taking some profit. Psychologically, that helps. And then you go to a no loss stop, and then you can sit with it, knowing that you've taken the risk out of the trade.
Yeah, this is very powerful stuff, especially if you've not been in this field before. Now, I want to try and help our audience out, if we could, Michele, by taking one step back, because this rabbit hole goes very deep. I know this personally. When we talk about swing trading, where we talk about bears, bull markets, what are we actually talking about? Can we take them through some of the fundamentals?
So in a bull market, really we talk about that as a euphoric phase. And we've had an incredibly long bull market, although we've had our corrections, again, partly because we've made things very attractive for corporations to buy back their own stock. So if I had to say from a fundamental standpoint, adding to the fact that we have artificially low rates, adding to the fact that we have corporate buybacks, corporations that pay no taxes, and a very low participation rate, by the way, by most mainstream people. I think 84% of the investment in the stock market is only owned by 10% of the people, the
Wow.
wealthiest people. Right. So from a fundamental standpoint, we are in this bullish phase with a potential bubble that could happen at any time. And then, of course, we also have any kind of other geopolitical situation that could flare up at any time. The Middle East, for example. I read something about Iran today, uh, with nuclear weapons.
Hmm.
North Korea. I mean, no, people sort of don't take it seriously, but you never know what could happen. So when you're in a bull market, what you really want is strong growth. Well, we haven't seen strong growth. Growth has actually slowed down. Economic statistics proving that the growth is continuing. Well, actually, once again, we're seeing growth slow down. The one thing that we have in the United States to hold on to right now has been very strong employment numbers, if that reverses. So I'd say the two things, if I had to really sum this up, that people need to watch is, number one, if you get 2 quarters of rising unemployment as opposed to declining unemployment, then we're pointing, and also falling gross domestic product, which is where you start to see the economy shrinking, then you know that this bull move will be heading potentially into a recession.
There's some insights.
Right. So really, very simply, that's what economists, and I'm not saying anybody should think about like being an economist, because economists do not trade. They're the worst traders, actually, and they're not steeped in reality at all. They're completely, into the math.
Yeah.
But nonetheless, with everything else I mentioned, Friday we have the unemployment number in the United States. It'll be interesting to see what happened there. We just had a good gross domestic product number, but we have to look at what happens in the next quarter. And of course, look what happens at the rates. Look what happens also with the dollar, which is another concern of mine.
Hmm.
In a bear market, obviously, the proverbial what hits the fan, and that too feeds on itself. They have that expression, stairs up, escalator down.
Yep.
Right. So so that's really kind of the other thing, is that what happens in a bear market is it feeds on itself. But what makes bear markets eventually end, and I say eventually using United States history, not Japan history, is because we're very hopeful people. As a race, we're extremely hopeful. And so that gets reflected in the market. And
The sentiment, is that what they
the
refer?
sentiment,
Yep.
the sentiment shifts. People want to be bullish. They want to buy stock. They want to see corporations grow. They want to go out and spend their money. So eventually that's when you start to see exactly the opposite. You start to see the employment numbers. Now all of a sudden people are more employed. You start to see things like manufacturing numbers growing, etc. Or in the case of 2008, you had quantitative easing, which of course just made everything to be borrowed a lot cheaper, and that's why we saw the recovery.
Do you find that sentiment is seasonal? Meaning, for example, if we come into the festive season, there is an uptick in positive sentiment?
Well, this is where I don't like to get too pigeonholed into
Hmm.
these seasonal sentiments. For example, sell it, buy in May, what is it? Sell in May and go away. I mean, if you've done that for the last several years, you've gotten killed.
Hmm.
So, and the reason why they say that is because it enters into the summer season, and typically the summer season is not a hot time for stocks. Well, that's not always the case. Just like right now, where seasonally should be in the Santa rally. And as you know, yesterday the market took a tumble. Today it came back, but
Yep.
will that sustain? Who knows? And that's basically what I do every day, is I analyze that for people and I put it into a blog. So I would say don't get yourself too caught up in the seasonals. Although, there are definitely certain instruments to look at certain times that could be interesting and have been very predictable at moving. Like, for example, electronics, and let's looking at NVIDIA. NVIDIA usually typically at this time of year moves up because of cloud computing,
Hmm.
and people go out and buy technology. But, we'll see what happens. Right now, NVIDIA is really, really down from where its peak high was. So it'll be interesting. It's an interesting gauge, as is the whole semiconductor space, to see whether or not we're going to get our Santa rally, or today was just more fake news on the trade situation, which nobody really knows what's going on.
It's funny, isn't it? I somehow link NVIDIA's uptick with the recent sentiment towards digital currency and mining and things like that, which is actually announced in their actual annual report, which was quite interesting. Now, I'd love to talk a little bit about one other terminology. You talked a little earlier, Michele, about 10% owning essentially the market. They're referred to as whales. Could you explain what a whale really means and what part do they truly play in trading?
I'm sorry, what was the word that you just used?
What I've heard called were whales. Those were people in the markets that dominated, and they were sitting back, and they have that much capital, that much control financially, that they can affect the markets. Is this a real thing?
I've not heard that expression, so that doesn't necessarily mean it's not a real thing. But I will say that nobody is bigger than the market. I mean, right now we've had a situation where headlines have been bigger than the market, and Trump really has the ability to move the market.
Yes.
But that may not necessarily go on forever, because the market changes and things what becomes hot one minute is the market gets immune to the next. And so in terms of whales, I'm not really sure if I would agree with that. I think that there's so many different factors in the market right now. The biggest whale, really, if you want to say, besides obviously the administration, is going to be the fact that corporations really can just do whatever they want right now, because they have so much cash on hand, and they can buy back their own stocks without showing any growth in the company whatsoever, simply because they want to make it very good for the bottom line shareholder.
Yeah, the tax havens and all these types of strategies that they employ. Now, look, for everybody who's on the call today, this is one of those topics that you cannot condense into just a 30-40 minute call, of which I'm absolutely loving, Michele. Thank you so very much. Now, instead, you can obviously pick up the tone here that Michele has decades of experience. She is the Director of Trading Education for a reason. Now, when people want to find you, Michele, and start working with you, and also get your wonderful book, Plant Your Money Tree, where are they going to find you?
Well, if you go to our website, which is www.marketgauge.com, and that's Gauge, G-A-U-G-E. It's amazing how many people reverse the A and the U. Yes. There, a pop-up window comes up where you can order the book and also get a bonus, a free bonus of my actually explaining in a video what the phases are. So that's a nice little way to get the book. And if you want to follow me on Twitter, my handle is @MarketMinute, and I'm very active on Twitter. Plus, I do write a daily blog that is free called Mish's Market Minute Daily, and you can get that in multiple places, but simply you can go to the website and sign up for it. There's a little box there. I'm also very, very keen on answering emails when people have questions, and that's mish@marketgauge.com. So then if you really want to find me, it's pretty easy too.
There you go. Look, this is incredibly powerful content. I'm actually going to personally follow up, because I know that Michele can change my world. Thank you so very much for spending some time with me on the My Future Business show today.
Thank you, Rick, so much. It was a pleasure to be here.
Thanks for joining us today. If you enjoyed the call, then make sure to subscribe, leave a comment, share us with your friends, and book your spot on the show at myfuturebusiness.com/interviews. And if you're looking for solutions that will help grow your business, then visit myfuturebusiness.com/shop.